Is there a way to know ahead of time the market is likely to bounce from this level? Well, in today's video, I'm going to share with you guys how I can use Orderflow, Bookmap, and a very simple indicator to find high probability turning points in the markets. So now we're going to start off looking at the 5-minute chart. And at the time I'm recording this video, this chart is from today's price action. I was able to spot this pattern as I was going back and analyzing my trades. But notice right up here about 10:05, the market starts to roll over. Now, a lot of traders, they're going to be looking over here at prior swing points, thinking the market could potentially double bottom before ultimately bouncing back up. However, when we come over and we look at Bookmap right here, what do we see now right down here? We have resting liquidity. The market almost makes it down there, ends up bouncing up. Now, there's a big clue as we're looking at Bookmap. As we're coming down, notice we have a swing point right here. All right, these bubbles basically represents aggression between buyers and sellers. The bigger the red bubble, the more aggression to the sell side. The bigger the green bubble, the more aggression to the buy side. So as we're coming down here, notice the sellers got more aggressive. And then what do? We pop up, we come back down. But notice as we start breaking that larger bubble, are the bubbles getting larger or smaller? They are absolutely getting smaller. And knowing that we have a big buyer sitting right down here is a big key that we could potentially be getting ready to bounce in the market. However, using Bookmap is only one piece of the puzzle. If you guys want to check out Bookmap, there's a link in the description box down below to ensure you always get the best deal. So now we come over and we take a look at Orderflow footprint charts real quick. And as I'm looking at this, I want you guys to pay very close attention. And if you stay tuned to the end, I'm going to share with you guys another confirmation that's going to give you more conviction in holding this trade as the market's actually rallying on the way up. But I want you guys to pay very close attention. The market comes slamming down. We have a negative 716 delta. We bounce up. We come back down. We have negative 436. We bounce up a little bit. We come down. We make another lower low, a negative 242 delta. Now, that alone is not enough for me to go ahead and take a trade, but we can clearly see that every time sellers continue to push down, they're getting weaker and weaker on every attempt. And then what do? The market bounces up one more time. We start coming right down here. Now, this attempt was not enough to make a new low, but notice the delta as the sellers pushed it down. This delta on this down candle was much less than the prior candle at 1028, where we had a negative 242 delta. However, that's still not enough for me to go ahead and take the trade. But instead, look at this next candle right here. Now we have a negative 43 delta. Now, this is important because negative 43 is a more positive delta number than negative 171. Then as we go ahead and we fast forward a little bit more, notice what we have right here at the 1033 candle. We actually get a positive delta, but now it's 248. So now we've had two consecutive candles where the delta has actually increased, right? This candle right here increased from the prior candle's delta. This candle's delta increased from the prior candle's delta. Then within this candle, we also have multiple imbalances, which we'll talk about later on in this video, and the market goes running on up. So where could we get into this potential trade? Well, one area we could have simply got in as soon as the candle closed, and we could have put our stop loss. There's a couple locations, but we could have put our stop loss at the bottom of that candle, below that swing point, or potentially below some of the stacked imbalances, which we'll talk about later in this video. But then as the market's running up, I want you guys to pay very close attention. Is there any clues up here that the market is likely going to run out of steam and potentially start to pull back here just a bit? If I fast forward, look what we get. We get a big nasty red candle. So as we're looking at this, is there any clues letting us know that the market was getting ready to run out of steam? Well, if we come over and we look at Bookmap, here's where the market ran on up, and look what we have resting right above us. You can see right up here at the top, there's 197 contracts waiting there. That means if the order is above price, that means that is resting sell limit orders. If we see the horizontal lines like we saw down here at the bottom, this is resting limit buy orders. So it's really no surprise that we've seen the market start to come back here just a bit. But wait, there's more. Because if we come over and we look at this chart right here, notice as we came down towards that same swing point. If you guys ever join my live streams on the main channel, we talk about this all the time in the power of the 9 count, right? What do we get? We get a 9 count right there at the low. So not only do we have order flow off the footprint chart, not only do we have resting liquidity there that we can see on Bookmap, but we also have a 9 count. But wait, there is still more. Notice right here, I want you guys to pay close attention. Look at the swing point here. notice as the market pushed lower and then as we made another attempt lower. Well, right down here, I'm looking at Delta, and this is a free Delta indicator that you can download from the NinjaTrader ecosystem. But notice this candle had the largest Delta. Then as we push lower, less Delta, and then less Delta once again, which is very similar to what I showed you with the Delta count on the footprint charts just moments ago. This is just in a histogram type of format. And then notice as we came back up, before the market makes it right up here to the resting liquidity right here about 66.90, what do we get? Well, before we get up to 66.90, right before that, we're starting to get other warning signs in the form of another 9 count, and then the market starts to roll back over. Now, a 9 count by itself for me is not enough to take a trade. It's just an added confluence if I have other factors to go ahead and take the trade. Now, were you guys able to also spot another telltale? The market was likely going to go ahead and start to come down. If your eyes automatically gravitated down here towards the Delta, notice as price ran up, what do we see? We see the Delta declining. So again, all these pieces start to fit together. Now, before we go ahead and start talking about the stacked imbalances, I want to let you guys know the order flow tool that I'm using is right here from Affordable Indicators. It's the Impact Order Flow Indicator. If you guys use the link in the description box down below, use code Mike at checkout, you'll always get the best deal. So now here's what I like about the order flow package. Now, NinjaTrader's lifetime license does come with a footprint chart, but it's not nearly as feature packed. For instance, look at the stacked imbalances. You can see the dots that we have right down here. There's essentially 1, 2, 3, 4, 5. Well, this could be a stacked imbalance. We see this highlights an area. Now, this could be an added confluence. We have another one right here. So if we were to get long off all the criteria that we already talked about earlier in the video, guess what? We could get long right here. As we came into it, maybe we start coming right back above this shaded area. We could literally put our stop loss right below this shaded area, have a very minimum stop loss. Then right up here, we can also use the stacked imbalances as a way to go ahead and to trail our stop loss and then wait for the market to break through that level, because as we start to break through stacked imbalances, the markets are likely going to go lower. And as we fast forward, what do we get? We get the market breaking down. Now, unfortunately, we did not get 3 or more consecutive stacked imbalances on this down candle, but let's just fast forward real quick and notice these stacked imbalances also act as potential support and resistance. So it's really no surprise that the market came right down here. Now, if you guys watched the video that I put out last week, I also talked about how we can use stacked imbalances for momentum plays. Watch the video on the left. And if you want to see how to use stacked imbalances for reversals, watch the video right here on the right.